today, thank you everybody for joining. We have Vinny from MassMutual and Patrick and Gavin from Assurity with us today. I want to thank you both for taking, or all three of you, for taking time out of your day to meet with us here at Regent. Our goal today is to explore how each carrier approaches disability or income replacement planning, from different designs to some underwriting questions and a lot of sales strategies, so we can kind of see where each solution best fits our clients. So this is a roundtable. I'm going to ask some questions. Feel free to chime in with questions of your own, but let's get started. So you guys can choose who wants to answer what. Feel free. So the first thing we're going to do is around market positioning. So what trends are you seeing right now in sales? Is there a particular client demographic or profession, like in your specific carrier? What are you seeing most?
You want to take that? You want me to?
Go ahead. You can start.
All right. So in my world, we're seeing a ton of folks who are CRNAs, certified registered nurse anesthetists. Actually, my largest producer, that's really all they do is CRNAs. CRNAs tend to make, when they're 1099 employees, somewhere between $200,000 and $600,000 a year. So they have very, very significant incomes. They tend to make more than most doctors, actually. And when they're 1099, they have no underlying group coverage. So they're really big contracts, really big policies. They're definitely worth your time, and they're in the medical space, so they tend to actively seek out this type of coverage. The only other big trend that I could see is a trend towards ease of doing business. Most of the carriers in our world are moving more towards guaranteed standard issue, especially in the resident space. Carriers have made a lot of changes. MassMutual is doing the same thing to make business doing easier for guaranteed standard issue type business. Answer a couple questions, boom, 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 you get a policy. You don't have to deal with the underwriting and everything else.
Yeah, I think to play on that medical piece, I mean, from the marketing and kind of occupation piece, we see a lot of, dental hygienists as well. When you think about dental hygienists, when you go to get your teeth cleaned and things like that, we're seeing a lot of those folks that, work at more than one dental office where they have more part-time jobs. So they're looking at not having a full suite of benefits offered to them as a full-time job. And then also in some of these offices in the medical field, you're seeing a lot of, and I just experienced this at my dental office, where they're offering skincare and some Botox type things, where they're doing these kind of side gigs, and we can underwrite some of those. So that's a little bit of a difference that we've seen in the past, or kind of what trend we're seeing now. And I think from the industry itself too, I think the importance of DI. I think we're starting to see a little bit more of a trend, towards the mental health and kind of chronic health a little bit more than we have in the past for a lot of different reasons. So I think there's a lot of different trends in the DI space that are really becoming important.
Interesting. How are successful advisors framing disability in today's market?
So I would say for successful advisors framing disability insurance, a couple of things that are interesting. Number one, they tend to look at the disability coverage from an aggregate perspective, meaning, let's say, take your monthly benefit and you multiply it by 12. Let's say that equals $100,000 in total coverage for the year. And let's say you have 30 years to retirement, that's $3 million. So rather than talking about the income protection or disability policy as a whatever, $7,000, $8,000 a month benefit, they're talking about it as a $3 million benefit. They're kind of stretching the mind a little bit. And actually our illustration output will do that math for you automatically. The other thing that I see successful advisors doing is, and I struggle to do this myself, is using the term income protection as opposed to the term disability insurance. Disability insurance has a lot of negative connotations associated with it. It's not going to happen to me. I'm not going to end up in a wheelchair, get hit by a bus. Income protection doesn't have those same negative connotations. So that different framing, I think, is helpful in the disability conversation.
Yeah, that's a great point. I think the income protection wording is certainly a good piece for marketing. There's no doubt about that. For us at Assurity, it's a little different because we actually have a product called income protection, which is short-term disability. So, but when we are talking about the disability piece, I think the other piece that advisors that we're working with, and I'm sure Vinny at the same time,
Thank you.
is getting them to understand the idea of, is it group coverage benefits? Because their clients will say, "Oh, I have disability coverage through work." Okay, well, is that short term? Is it long term? So I think the idea of talking to your client is, yes, they may have some coverage, but is it what they actually think it is? They may not be what they need as a clientele.
No, Kelly, can I add one extra thing? We didn't do this in the beginning, and I'll take ownership over this. So I represent MassMutual, and
Oh, we do.
Pat and Gavin represents Assurity, and we have such very different markets that we focus on. Like, just as an example, Pat was talking about dental hygienists. We don't even offer coverage to dental hygienists at all. They're an automatic decline at MassMutual. Pat and Assurity and Gavin do a phenomenal job at offering to that subset of the market. We don't have short-term disability coverage like Pat was just referring to. Assurity does a phenomenal job. So our markets are just very, very different. So we're getting kind of a juxtapose between the two different carriers and the two different markets. I should have mentioned that up front.
That's a great point, Vinny. I'll just add, I think Kelly and Stephanie and the team have done a good job by, asking if we would do sort of a joint call, right? Because this really does help as an advisor, the reality of, I have this client, what is the best fit for that? And it's going to be any number of carriers, right? And there's Phoenix, and Principal and the Standard. There's some other DI carriers too, but I think the benefit you'll see throughout our call is exactly what Vinny's saying, is we run parallel to each other. We really do play off of each other well, because we don't do dentists all that well. We don't do white collar as well. I mean, we can, and we do write a decent amount of it, but if it's a dentist who's making, $500,000 a year or something along those lines, and me and Vinny are going head to head, or MassMutual and Surety, MassMutual is going to win that, right? But that's the benefit of Regis offering you these kind of calls to kind of show both sides of it. So that was an important point, Vinny. Sorry, Kelly, we took over your
No,
call.
you're fine. That's okay. Well, since you guys pivoted that way, I guess I would ask each of you, where do you see your products being the best fit? Like, what is your ideal client? And then a secondary question is, what are the red flags or things you say, no, this isn't something we're going to deal with. So I'll leave that to each of you to answer, because it'll really show the differentiation of your offering.
Yeah, so I would say for MassMutual, the higher the income and the lower the amount of manual duties that the person has, typically that's the better opportunity for MassMutual. So just to give you an extreme example, like, let's say you have a hedge fund manager in Manhattan making $3 million a year. That's 35 years old. That's a phenomenal MassMutual opportunity. Or an attorney in LA or Miami or New York making $4 million a year, $2 million a year, $1 million a year, a lot more than I make. That's a phenomenal MassMutual opportunity. If we look at the business market, and I would say for a business owner, if you have, I'm going to throw a number out there, 5 to 10 or more employees within the business, and the business owner is not doing any manual labor, that's where, let's take the other side of it. If the business owner is doing manual labor on a regular basis, I would say that's the red flag. That's where MassMutual's like, we're not going to be competitive. In a lot of cases, we can actually offer, but frankly, we're not going to be competitive in that space. So let's say, just to give you a real life example, you're a contractor and you have 2 employees and you're doing some of the actual work yourself as a contractor. Technically, we can offer coverage in that example, but that's not a MassMutual case. So white collar, white coat, behind a desk, highly educated, higher incomes, that's really MassMutual's niche.
Surety is everything else. No. No, but that's a great transition. So with Assurity, we're really focused more on the blue and gray collar. Some of those occupations that are a little bit more manual labor driven, or maybe a little bit more of a dangerous type in the sense of law enforcement or firefighters or EMS. We'll underwrite those folks. Some of the strange things that we'll underwrite that, one dental hygienist, you'd think, why not underwrite them? But, some of these other carriers won't. Chiropractors, We'll write chiropractors, not in California, but we'll write chiropractors. We'll write hairstylists. That sounds like another strange one, but most people don't want to write. We'll write hairstylists or spa or massage people. So we look at some of those non-traditional white collar type stuff. So everything that's blue and gray collar, and that can come into play when you look at, a perfect example of Vinny just said. I'll use like a plumber, right? Do you own the plumbing business? Are you the owner, depending on how much manual labor you're actually doing, or you might not be doing any. You might have just a full staff of plumbers that are doing it. We'll write the whole group, but there'll be different occupation classes based on that labor intensive piece versus just the owner of the business. So those are some of the bigger occupation we see. I'd say the other difference where we'll use the dental hygienist, like Vinny just said, we'll write a dental hygienist, but say they were also declined for another, like a medical reason. We have at Assurity a graded benefit product where if you've gone to MassMutual, Standard, Principal, any of the other great DI companies that are out there, and they've been declined either for occupational reasons or medical reasons, we may have an opportunity for them with a graded benefit type product, which basically in the first couple of years there's limited benefits because of that graded nature of it, but it will give them some coverage, which will be better than nothing. So those would be our markets.
Great. Vinny, are there any unique riders or flexibility features you'd like to share that MassMutual has?
Yeah, so just to back up for one quick second, then I'll go into riders or optional features. Every single occupation that Pat just mentioned, we either won't offer at all or we're not competitive. So that's just gives you a perfect example of where the two carriers kind of fit in the market. But as far as riders or optional benefits or underwriting programs, things like that, we have something called Executive Select. So if we go back to the example that I was giving earlier, the hedge fund manager or the attorney or the business owner who's making, this is very niche by the way, but who's making really, really big income, like $800,000, $1 million a year plus. The traditional carriers will have a maximum that they're willing to offer or put on one life, right? That could be $30,000 a month, $35,000 a month. And then historically, you'd have to go to Lloyd's to get coverage over and above that, right? Because the traditional carriers were only comfortable for a long time offering X amount of coverage, let's say $35,000 a month on one single life on one single person. MassMutual has something called Executive Select that actually layers on top of existing coverage, whether that existing coverage is with MassMutual or whether that existing coverage is with, doesn't matter, Surety, Principal, Standard. We can offer up to $15,000 a month over and above the traditional disability coverage, and it'll function very similar to a Lloyd's policy. It's a total only contract, there's a 5-year benefit period, but you never have to go back through underwriting again. With Lloyd's, you have to go back through underwriting every 3 or 5 years. It pays a dividend and it pays full compensation. So very interesting niche market that goes, it's a layer of coverage for folks making, it's technically $800,000 a year plus. You have to be 4A5 base. You can't do medical dental. But it's just a phenomenal opportunity. Those tend to be really big cases, $20,000, $30,000, $40,000 a premium on one person sometimes.
Wow, nice. Pat,
Definitely not our market.
Pat, does Assurity have any outside of the graded benefit? Do you have any unique riders or features that you wanted to share with everyone today?
I would say rider wise, just on the policies that we have, we do have like a guaranteed insurability rider, which gives you the ability to increase at a certain point down the road to increase the benefit. We do have a critical illness benefit rider that you can put on there. So if something does happen within a critical illness, you can get a lump sum payment based on that. We have a return of premium rider. So if the policy cancels for whatever reason, lapses or at death, or turning 65, they can get the return of premium on that. So, those are some riders that we see quite a bit of. I would think the other program that we would be on the business owner side. We do have a business owner upgrade program. So if you are a business owner, an example would be, we typically will have a plumber that's listed as a 2A, but if they're the business owner, so with us for 2A, you're limited to $10,000 a month. But if they're a business owner, we can upgrade them to 3A, which is going to give them the opportunity to get $20,000 a month. So there's that upgrade program. Not a rider, but it is part of the program that when we're underwriting it, we'll take a look at.
That's great to know. Thank you. Now, Vinny, you had talked about the stacking of coverage that MassMutual does allow that, or dual coverage. Pat, does Assurity, just so we know, allow any dual coverage or stacking of policies?
We can do that, but we're going to take into our limits. So if we offer out 20,000, if Mass is giving them 15, we could do 5, right? So we look at those max that we have.
So your max cap is 20,000
Yes.
in benefit. Okay. Vinny, what is the max cap, or is it based on a benefit percentage at MassMutual?
I'll give you 2 answers to that. For a 4A, 5A OC class, so that's like the examples that I was giving, the attorney, the hedge fund manager, the CPA, the business owner, will issue up to 30, we just increased our limits, up to $35,000 per month on one single person. And if somebody has group, this is highest in the industry actually, if somebody has group in force, will participate to $40,000 per month on the traditional coverage. The other thing that's interesting, as you can tell, they're really going after that high income market. The other thing that's interesting is if somebody has group, I won't get into the technicalities of it, I think it'll take too long, but if somebody has group coverage and they're making between $450 and about $700,000 a year, our replacement ratio, which is just the percentage of coverage that we'll offer, is very high. So it wouldn't shock me to see MassMutual's offering, I'll just make up some numbers for a second, $20,000 a month, and our competitors are offering $14,000 a month for that same person with the same circumstances. So when somebody has underlying group and they're making between $400,000 and let's say $700,000 a year, right in that sweet spot, we tend to offer a significant amount of coverage in relation to our competitors.
Thank you both. That was helpful. What objections are you hearing in the field, and what are the best ways to overcome them?
So the most common objection, so we're talking producers, I would assume, right? The most common objection that I hear is it's too hard, it's too difficult. A lot of things have changed in the disability space in the last, I don't know, let's say 4 or 5 years, 6 years since COVID. During COVID, clients didn't want to have a nurse come to their house, right? So carriers created underwriting programs to kind of waive the nurse, and that's kind of carried forward. So Mass has a program called Express DI. So I think this will help overcome that it's too difficult argument or conversation that we have with folks, where they effectively waive all the underwriting requirements. It's just take an application for anyone under age 50 and looking for $10,000 of benefit and under. There's some nuances in there that we don't necessarily need to get into here, but it's just take an application. Now, if you had a heart attack 2 weeks ago, they're probably going to look into it. But if you're below the age of 50, applying for 10,000 and under, that typically means no financials, no nurse, no APSs, none of that sort of stuff. So the process really has evolved or changed over time and become much easier, I think, for the producer. So it's too difficult probably is the thing that I hear the most, but I would disagree with that based on some of the underwriting programs that have come out.
Yeah, I would agree with that exactly. We don't have those kind of programs, but I do think that the process is getting a lot smoother. The focus, I mean, one thing that we can all say, whether it's life or DI, is COVID did give the okay for companies to start finding a better way to process business more smoothly, less intrusive. So that definitely comes into play. And we do hear out just disability is difficult to understand and definitely to write. I'll agree with it might be a little difficult to understand when you don't focus on it daily. I agree with Vinny. I disagree that it's a hard product to underwrite and to get processed. I do think we hear a little bit too in our world, and I'm sure Vinny knows too. Well, I have group coverage at work, so I don't need it. I don't need that whole thing. And I think as an advisor, it's incumbent to kind of start asking some of those follow-on questions. Well, is it short term or long term? Because as we both mentioned, Vinny and I throughout this, there's short term, that focuses more on weekly and very limited benefit periods and limited elimination periods. That is one different focus. So some companies are only offering short term, and they're not offering long-term anymore just because of the cost of benefits for a company. So we do hear that challenge quite a bit. I get the cost one once in a while. I mean, in Vinny's market, probably he doesn't get that as much, probably because they are focused on a higher end, bigger dollar type amount. But we do get, well, the DI is too expensive. And I think if you go back to what Vinny said on the, looking at instead of a $10,000 a month benefit, you look at a $3 million benefit over the lifetime. Is it really expensive? What are you going to give up if you don't have it? So I think those are the ones that I see the most of kind of the objections.
I love that. And I kind of moved a little bit backwards on it too, because I asked the objection before I asked you something you both are fantastic at, because I've heard it, is how do you start the conversation? And I know you both have shared this with me a couple of times. So I'm going to put you on the spot and have you both share with the advisors on the call is, how do you start that conversation from ground zero? How do you begin that?
Yeah, I feel like I'm stealing the thunder. Do you want us to start going first here, or do you want me to keep
No,
going?
no, I'm gonna let you because no, you're fine. Go ahead.
Okay.
Beauty before age, or whatever that is.
I think one of the softest entry points into the disability conversation, and Pat touched on this a little bit, he's right on the money, is somebody gives you that rebuttal, very common. I have it through my employer, I'm all set. All right, I already have disability coverage. Ask them 2 questions. When was the last time you reviewed it? And do you know how it works? When was the last time you reviewed it? And do you know how it works? So I'll go off on a little bit of a tangent, but I think this is interesting. And Pat probably can say the same thing. I've presented in front of tens of thousands of people over the years, literally. And I've asked, I don't know, thousands of advisors. So I'm not putting anyone on the spot here, but I've asked literally thousands of advisors that exact question about their own personal coverage. And I've only had one person ever really and truly understand the group coverage that they had. I'm talking about the advisors that we work with, that they personally had. So I don't say that to embarrass anyone. I say that to help folks understand that if we don't understand how our coverage works for ourselves, and this is the industry we work in, do you think our clients understand how their group coverage works? They don't. They may know one factor, maybe 2. It covers 60% of my income. That's usually the only thing that they would know. So when was the last time you reviewed your coverage? Do you know how it works? Get your hands on their group long-term disability plan. You have some phenomenal resources at Regis. Send that over to Regis, and they can give you 4 or 5 bullet points. Boom, boom, boom. Here's how your group plan works. Here's the holes. And then here's why it makes sense to supplement over and above that existing coverage. It's an educational entry point into the disability conversation versus a sales entry point. You're just trying to educate them. Hey, let me take a look at what you got. Maybe you're all set, maybe you're not. We'll just talk through it, right? Very soft, simple, easy entry point into bringing it up.
Yeah, I'll echo that. I think that's I have group stuff, some kind of coverage. Those are 2 great questions. Do you know how to explain it? I mean, do you know what it is? I think those are important. And as advisors, the benefit of those couple questions that Vinny just said, you're not getting in the weeds of anything, right? You're just asking them.
A good point.
Do you have it? You don't need to be that expert. What you do need to do is, I'm sure Regis has like a questionnaire, or I know that they have all these different carriers, right? So they're familiar with the different carriers, the different benefits. They know that Assurity is more blue, gray collar. They know that MassMutual is more high dollar, high net worth type focuses, right? They're going to know where to position you, and then they're going to help you ask the further on question. Is your coverage portable? If you're making $250,000 a year, are you actually going to get what amount are you going to get back in a monthly benefit? Should you have an individual policy on top of your group benefit? All these questions will start coming up after the fact. So I think the entry point for DI is not as difficult as people would seem to think it is. With it as an example, sort of an extreme example, we work with a lot of P&C agencies. So as a P&C, when I'm talking to a P&C agency, I ask them, well, you're insuring mom and dad's car, you're insuring mom and dad's house. It's some form, whether it's work or individual, you're insuring their health. In some cases, hopefully, and if you work with a Regis, then obviously you've got insured for your life. Why are we not insuring? Are you insuring your income? You're insuring that income protection, which is the lifeline of all the planning that you do, right? So DI to me in that entry point is, almost like insurance as an advisor for your business, because the planning you all do is based on the income that your client's making. If they can't pay that anymore, the planning that we've done, because I'm a big believer in, it's even on my LinkedIn thing, what we do matters. If they can't pay for it, the planning doesn't really matter. So we have to meet the needs. And so I think the DI conversation is easy to open up the door, that entry point, as Vinny said. And that's where, Regis comes into play, and then they rely on us as the carriers as well to make sure that we help you take that to the next step.
Oh, that's great. Thank you. I like that bridge too of how, like, what happens if you can't go to work tomorrow?
Right.
What
Yeah.
then?
Yeah,
So,
that's a good one. Yeah.
If you look at the numbers, unfortunately, you look at disability numbers, people are living check by check. They can't survive a month or two without a paycheck coming in. And what does a disability do? I mean, that takes away a significant piece,
yeah,
especially if it's a permanent.
absolutely. Pat, you at Assurity, you have some unique products that help people who aren't insurable otherwise. Did you want to touch on those just a little bit? Let our advisors know what they are if we need to roll into something like that, because they're not even eligible for maybe that graded benefit.
So, I mean, we do have a kind of a accident insurance and accidental death insurance. I mean, not so much in the DI world, but certainly, accident insurance is just what it sounds like. It's basically Aflac insurance for a non-business, right? So it's something happens, you get in an accident, you're going to get paid. Your son or daughter plays sports, they break a leg, it's going to cover all those different things. Now, the benefit of where that kind of fits into, they don't have DI at all, is it's guaranteed standard issue, right? So it gives them something to fit in. Just like I said, the graded benefit plan, if you've been declined from MassMutual, standard and any of the other carriers for occupational medical reasons, we may have an option. It's going to be more expensive. You're probably not going to give the same amount of benefit, but you need to get something. And if you can't get that, because it's about 80% of the time we can give them an option, but graded benefit doesn't always work either. I mean, if it's cancer, stage 4 high, you're not going to get that. Accidents like that next level down, right? It gives you something because it's guaranteed benefit. Accidental death isn't quite guaranteed, but pretty close. So those are some other, not for this cup, those are some options that definitely give you some resources. And again, as an advisor, working with Regis, they know that there's all those options out there, because our job is not just to make sure that we're offering you the product, but making sure if we can't get what we've discussed, what is that option? So not just saying, no, we can't do this, but MassMutual won't do this because they're dental hygienists, but we know that Assurity will do that. Oh, we got the client from that too. Oh, let's check a graded benefit. Oh, you got the client from that too. Well, we can at least give you an accident thing. Not ideal, but it's better than nothing.
Agreed. Thanks for sharing that. I know you weren't planning on that.
There was not. Caught me off guard on that, but that's okay.
You did great.
The gray hair helped on that one, trying to scramble.
And we are actually getting ready to wrap this up, but I wanted to give you each a little bit of time. If there's anything else you want to share, I know you both probably have a lot to share on this subject, but if there's anything else you would like to add to the conversation we've had today.
So the last thing that I'll share is, I guess, more 30,000 foot view, just how excited I am about what MassMutual is doing in the disability space. We actually did a study to look at profitability of the different products that MassMutual offered, all the different life products, all the different annuity products, the investment products, and disability insurance came out as one of the most profitable products that MassMutual offers. So I like the saying, follow the money, because it's typically very true. After that study was done a couple of years ago, the executive leadership team and CEO at MassMutual have really invested in the disability business. I've been with Mass for 13 years. I think in the last 2 years, there's been more positive change than all 13 years combined at MassMutual. And I mean that sincerely. They really, really want disability business, and they are putting their money where their mouth is. They're coming out with a brand new BOE product. Actually, it came out on Monday of this week. They're fully redoing the individual disability product, the guaranteed standard issue product, the increased issue and participation limits. They've added probably 15 different underwriting programs in the last couple of years. They are really investing in the disability business, and I think the future is very bright.
Yeah, I think, I think the DI space is a profitable business for carriers, right? And I say that because Assurity is in that same mode, not quite with some of the stuff that obviously MassMutual is doing, but we do have a brand new revamped long-term DI product coming out here in the next few months that really kind of adds to a lot of what we've been talking about, making the technology piece of it for issuing and processing smoother. Obviously the increase in some of the benefits that are out there now, because as the world changes, product has to change with it. So we are pretty much focused on that. We are definitely focused and committed to that kind of blue and gray collar market. So just sort of the opposite of what MassMutual is doing with that high end. We're trying to do that middle to mass affluent market space. Mass really focuses on that high net worth space. So I think it's really a great value for that. But don't assume because somebody's a cop or a fireman they can't get coverage. I think some of the other important things that the expertise comes into play is when you work with state or federal employees, it's a little bit different because they have state pension plans and there's some requirements there that you need to understand by state of how much you can actually offer to somebody. So I do think the disability space is a space that I know it's flat right now. When you look at LIMRA and you look at the numbers, it hasn't been growing much. But to me, with the way the markets have been, it hasn't gone down, right? So it has been starting to expand. I think some new products are coming in, some carriers that have gotten out that were just sort of half in the market space, half not, have gotten out recently. And I think those are in it, are starting to commit to it more and really helping to grow that space. Because I think from a carrier point of view, it is a profitable product. For you as an advisor, definitely a profitable product. And certainly something that you should be helping to build into your plan. So we appreciate the time from the Assurity side.
Yes,
Yeah,
we
thank you.
appreciate all of your time. Thank you all for hopping on, especially Vinny and Pat for coming and answering all my questions. Our follow-up is I'll be sending out some case examples with our contact information here at Regis, just to kind of differentiate what the ideal client is for both carriers, when you would go where. So we'll send out some case studies. I know Pat sends them or Gavin sends them to us regularly for Assurity, and I'm sure Vinny will provide a couple for us as well. So we'll get those out to you along with a copy of the recording. And feel free to reach out to Stephanie or I with any questions. Thank you all for joining.
Thank you very much. Have a great day.
Thank you.
You too.